What's up, world? This is Sophisticated Investing Life, and today we're going to discuss why most hedge funds hate Tesla, although there are plenty of people on the bull side who love Tesla too. Now, in my day job as an institutional investor who invests and talk with hedge funds about their favorite stock picks, a day does not go by where somebody's telling me how Tesla's going to fall to zero, right? Everybody loves hating off of Tesla in the hedge fund community, right? And with Tesla hitting a new high, I just heard another bear case just before Christmas, with a hedge fund manager claimed that the company has a good chance to go bankrupt in the next 3 years. Like, isn't that crazy? Just come on now. It's ongoing. At the same time, there are a lot of supporters for Tesla, right? Both in the hedge fund community. There are some supporters in the hedge fund community. There's even one person I can think of in particular who believes Tesla is a $2,000 stock in the next 3 years, right? And Tesla's around 420, 430 right now. So nice jump in the next 3 years, right? As well as in the YouTube community. You got YouTubers who love Tesla like Jeremy from the Financial Education channel, who's been putting out videos about Tesla and how he's a buyer over the past year. As well as a new channel called Solving the Money Problem, right? He has built his channel solely on talking about Tesla in a very entertaining way. I will say I've learned a lot watching his channel alone. So check his channel out as well if you are interested in learning more about Tesla. But either way, it's just a lot of bipolar reactions to Tesla, even positive or negative. So I thought I'd pull both of them together, similar to what I did with Uber, right? I did a similar video for Uber, a bull and bear case for it. If you haven't watched it yet, check it out on the card. It's pretty good. It's probably one of the best videos I've done since getting back on the YouTube. So we're going to do the same thing here. Let's discuss the bull and bear case for Tesla, and let's see how things shake out in the end. Now, before we even get started, make sure to tap that like button and make sure to subscribe to get very next level content here on Sophisticated Investing Life. Now, number one, why buy Tesla, right? Let's focus on the buyers, right? Let's focus on the bulls. Look at the bull case first. The first reason to like Tesla is the overall growth happening in the EV industry. And EV means electric vehicles. Overall growth happening in the electric vehicle industry. This is the primary bull case for one of the hedge fund managers I know of who's more of a thematic growth investor, right? So thematic growth is you want to buy companies that are in high flying growing industries, and you want to buy a company that you think is going to be the leader of that high flying growth industry, right? So in the EV industry, is making the case that Tesla is the highest that's going to grow. So a lot of this comes from the first mover advantage of Tesla, why he believes they're going to just take off more, and they've already taken off more than other automakers trying to get into the space. So that's part of it, right? So part of it is just the demand should be there over the next couple of years, and Tesla's so far ahead of everybody that most of the demand's going to go straight to Tesla, right? And the reason they're expecting to stay on top long term over the next few years is the second reason, which is Tesla's brand power. Elon Musk, I don't know what he's doing, but he's good at hyping up a crowd and getting people interested. Tesla is considered to be a premium brand automaker, right? So their EVs are a premium brand. They're next level to what you can get maybe anywhere else. Volkswagen, Nissan, anybody else you can think about who has well-known EVs at the moment. Tesla's next level, right? This has been shown as a winning business strategy for quite some time. You differentiate yourself by offering premium features, and this is why for some other industries it's worked too. So for example, Nvidia, if you all have been a subscriber for a long time, y'all know I love me some Nvidia, right? Nvidia over AMD for general processing units for computers and such, and gaming, because Nvidia just have better processing power. They just do things better. They just have more innovation there. Or more simply, why somebody would choose Whole Foods over Walmart for produce, right? So there's more organic offerings, just higher quality things. At least the perception of that is at Whole Foods over Walmart. So this is just the same thing. The perception of Tesla being that much better, right? And it also shows in the pricing, right? the pricing and the cars it shows, and be honest, the feel of the car. Like, has anybody ever test drived a Tesla before? Like, I did it. I mean, I was in the passenger seat, and I was like, oh my god, this is so smooth, next level. So yeah, I mean, that's part of the thing behind it, right? So just that brand power, just staying on top of things, offering premium features, and continuing those premium features and trying to build up on that, which is the third reason. The company's continued investment into innovation, right? Tesla has put billions of dollars to investing in building out these gigafactories, right? These huge factories take on large amounts of production, as well as do some other things. They're trying to experiment with their other business lines, as well as invest in new ways to show different cars, different models, like the Model Y, the Cybertruck. We saw what happened with the Cybertruck, right? And the Roadster, right? These are all different models that the innovation just doesn't happen as fast as other automakers, right? They don't put the money into it that Tesla does. And it also shows in performance, right? All the performance indicators, how you actually judge a car, of how safe it is, how fast it moves, all these different things. Tesla's just way above everybody else, right? So that is something to keep in mind of. Also, autonomous driving. Tesla already has that kind of figured out, still working on it, but kind of figured out in terms of, so on the innovation side, they're even beyond where Google's at, right? And where Uber is at, because they're actually testing it. They actually have it on the road with real drivers, whereas Google and Uber are still having it in like a testing phase, but not actually in the driver's hands, right? Now, the last reason is the most intriguing reason to me to be a bull of Tesla, and that's the embedded operating leverage in the company, right? So, operating leverage, the concept is that your profits increase much faster than your sales, right? It's like sales increase by 10%, but your profits increase by 20%, right? It's when your profits are starting to increase faster than your sales. So, as I mentioned before, Tesla is reinvesting all of their cash into growing and innovating as fast as possible. This is primarily why the company barely shows signs of profitability today. Even though they've been around since 2003, this is part of the reason. But that same thematic growth hedge fund manager, he's the one who put this idea in my mind, in that Tesla could potentially become the second coming of Ferrari in terms of profitability. Now, let's take this on a per car basis, right? Per car basis, Ferrari sells cars on average around $250,000, right? $250,000. Yet operating profit on a per car basis is about $80,000. So that's about a third, right? 33% operating margin. That is great. All right, that's why Ferrari is just on top of things, right? That is awesome to hear. Now, because of the high reinvestment rate, Tesla's operating margin per car has pretty much been negative. Up to 2017, it's just been negative, and it was getting really bad in 2014, 2015. I mean, it was getting rough, right? But things started turning positive during 2018, and now operating margin per car, maybe around 5% today, right? Maybe a little bit less. This is me ballparking it. But soon, those gigafactories will be built out. Those are major capital outlays, right? Those are major reinvestments that affect not just the income statement, but also the cash flow statement. Now, once those gigafactories are built out and that starts to subsume terms of reinvesting, like that, like just expect the margin just to pour on. Maybe not get on all the way to the 33% level that Ferrari experiences, but definitely above 20%, which is where actually Porsche is about. They're about 20% per car. So more in the upper 20s is the expectation, right? And at this level, this is where even quality investors like Warren Buffett may start even getting interested to pay attention to Tesla. Now, speaking of Buffett, would you like to learn more about Buffett's secrets to fast track your investment account to 6 or 7 figures? Because the media has not told you everything with Warren Buffett. They tell you it's been value investing that's been the key, but it's been more than that. There's actually been 3 secrets I discovered that's led to his just fast track of his own wealth and why he's become the wealthiest investor of all time. So download my free PDF, the top 3 secrets to watch, and also take them and even use them for yourself. It's going to fast track things for you and take your account to the next level, 6 or 7 figures in a matter of time. Now, let's hear what the bears have to say about Tesla. So first off, from a business perspective, there is belief that Tesla is an operational mess. Absolutely a mess. People just don't know what's going on. People run around with their hair on fire. There's a lot going on, right? So this is due primarily to past turnover of top executives, right? Like C-suite executives leaving the company, right? The rigid and frugal culture that's there, and the continue to always push your limits, even as a worker, and of course the many production expectation misses by the company, right? I mean, it just kept happening over and over and over again. So there's just a general belief among the bears that Elon Musk is really good at hyping up the company, but a poor executor, right? And he doesn't get people under him to do the executing correct, which I think primarily explains the volatility of the stock. It's the primary explanation of the volatility of the stock. And this poor execution flows through to the second reason to, why hedge fund managers actually want to short it. And it's the current financial situation of the company and how Elon Musk's ego is getting in the way, right? So as I mentioned before, Tesla is spending a lot on reinvesting in the business right now, to the point where they have to keep going back to the capital markets for cash. So on a net income basis, profitability looks like it could come up, or it looks like it's just almost there. On a cash basis, it's not there, right? It's not there. And this actually brings up the risk of reflexivity, right? It brings up the risk of reflexivity. Now, if you haven't heard that term before, you primarily use it as a risk when you're discussing IPO stocks, right? And I actually have a video on how to analyze IPO stocks, bringing up this risk of reflexivity. So if you haven't heard about it, check it out in the card above, learn a little bit more about it, and then get back to this video. Now, many bulls of Tesla, including the channel I mentioned before, Solving the Money Problem, sees the continued focus on growth over profits. That's a good thing. I actually see it as a good thing. Putting it in the same light as Amazon, right? That's always the go-to. What Jeff Bezos did, just ignoring profits for like 20 years, and then all of a sudden it just starts flowing, right? The difference though between Tesla and Amazon is that Amazon didn't use debt in this situation. They just kept offering more shares to the public. Of course, they kept diluting current shareholders, but they felt like it was worth it, right? And that's pretty much corporate finance 101. Don't take out debt until you've hit a sustained level of profitability that you can easily pay off the debt, right? So why isn't Tesla doing this? The reason why Tesla isn't doing this, because if they do, the short sellers are going to outweigh the new buyers into any new offering. That's going to lead to the stock going down. The stock's definitely going to go down. Now, it's not going to go down for long. It's probably going to be short term. Might even be as short as a week. But Elon does not want to give the short sellers any credit. They don't want to give the bears any credit on this stock. So even though it might only happen for a short bit, any loss from that perspective, Elon's not willing to take. Which is why he always shoots back at the short sellers on Twitter, right? He doesn't like them. He doesn't like people challenging what he's doing, right? So instead, he's taking a more dangerous path, putting the company in the hands of debt holders who can care less about innovation, right? They just want their money back. So this is a little bit of a dangerous thing he's doing. That it could potentially work against them, but let's see how it works out. Now, the last reason why hedge fund managers are short Tesla is due to the increasing competition in a limited market. So I already told you before, right? In a lot of ways, Tesla is so far ahead of all their potential competitors, but at the same time, those competitors are coming fast, right? So although the EV space is growing primarily due to new contenders entering the space. So, I mean, it might be entering faster than demand is increasing. That is really the fear, right? To me, that's really the fear. So in particular, out of all the models that Tesla have, it's the Model 3. It's supposed to be their affordable luxury car that the company expects to continue to sell at a high clip far into the future, right? And in the next few years, Tesla will be facing some fierce competition from Land Rover, from Audi, and BMW in the $40,000 to $60,000 price range, right? That's where Model 3 is trying to make their case, right? So it's going to be in the same space, and they're all going to have their own premium features. So Tesla's going to have something, BMW's going to have something different, Audi's going to have something different. They're all going to be different in their own way. Now, if all these other competitors are successful, right, and actually pushing out and beating out the Model 3 and taking market share, then pretty much everybody's going to have an EV, have an electric vehicle a decade from now, right? And that growth is just going to compress really quickly. And that is scary, because it's like, then what's the point of everything, right? What's the point of the growth? All the growth's going to stop. Hopefully Tesla is super profitable right by that time, but the reason for buying Tesla won't be the same. So that's kind of their argument. And hey, that's the difference. That's the bull and the bear case for Tesla. So which side are you leaning on? Actually, believe it or not, I'm leaning a little bit more on the bull side. I don't know what it is. Maybe it's because I've been proven wrong on Tesla before. Maybe it's because I'm a growth investor at heart. I love innovation. Like I mentioned before, the embedded operating leverage arguments seems very strong to me. Maybe it's all those things. But I'm a buyer in a unique way, in that I am not buying the stock to express my long view on Tesla. Instead, I'm selling options. In particular, I'm selling put options, which is the same thing as buying a stock, but it's unique in its own way. So to learn why I chose to do that for a stock like Tesla, check out my video in the card above of why I chose to trade options instead of buy stock. So which side are you going to lean on for Tesla? Are you going to agree with the bulls, or are you going to agree with the bears? Let me know in the comments section below. And don't forget, download my free PDF on Warren Buffett's top 3 investment secrets so you can take your investment game to the next level. That's all I have for you all today. So until the next time, thank you for watching, and stay sophisticated.